gentlemen. I'm happy to see that our seminar have attracted considerable attentions, and thank you for coming to attend this event. First of all, I would like to introduce our guest. We have already had an opportunity to visit a presentation delivered by Dr. Gabrіель Содерберg. Dr. Soderberg is an economist from Riksbank, and he also represents Uppsala University. He is specialized in economic history, and now it's a hot time to continue our discussion on financial inclusion, and we are going to focus on the essence and prospects of crypto assets. Before we start, I would like to mention that every participant is welcome to ask questions after the presentation has been finished. Now I give the floor Dr. Soderberg. So please.
Thank you very much. Is this functioning?
Yeah,
the microphone, excellent. So thank you very much for coming to this seminar, and thank you for having me here. This has been a tremendous day today, and also yesterday when I spoke at the Financial Inclusion Forum about financial inclusion in almost cashless Sweden, etc. So as Andrei said, exactly, I remember the name, but not how to pronounce it. So as he said, I am both an economist at the central bank, but I'm also a researcher in economic history. So that sort of will be closer, like that? Is that better? Excellent. So this sort of gives many of the focus of much of the work I do. So I have written a paper on what crypto assets or cryptocurrencies, if you prefer that. There is a discussion what to call these crypto things, etc. Are they currencies? Are they assets? Are they something else, etc. So, but after doing that and also working with the Swedish project on looking into the possibility of creating a central bank issued digital currency. The questions that we are faced with is what is money, etc. When do we use money? Why do we trust certain money types of money, but others don't? So if we start sort of looking into this thing, so if we ask the question, what are money, etc. What is it? We use it, etc. So my view of it is that we have to take a broad historical perspective on this, and we have to look far back in time when people started using money, etc. And one thing that is apparent, especially now with new technology, is that there is always some form of technology underlying every form of money. So you see the picture there, which is ancient printing technology from ancient China, roughly 1,000 years ago. This is what they ended up with. They sort of invented printing, and they were able to issue paper money. And paper money, of course, is something that we all know about. I still have 100 hryvnia in my wallet. I spent 600 during my 2 days here, and it's a note. It's a piece of paper. So that's one thing. There must be a historical, there must be a technological basis for all forms of money. But the other thing is that all forms of money must have some sort of trust behind them. We've spoken a lot about trust yesterday at the forum about digital financial inclusion, because it turns out that many of the people, there was this documentary that they showed, and many people said, we're not putting our money into the bank because we don't trust that we can get our money back, etc. So there are always principles of trust involved, and who do you trust when you choose to use or accept money, etc. And to me, it turns out that these questions of trust are actually fundamental to what money is. And if we try to take here different views of what is money, etc., what we find is that there are almost always normative rather than descriptive. They are always bound up to end up in the question, how should money be for it to work, etc.? How should money be so that you can trust it? So the three main theories of what money are all of these characters. So the first one is what I call metalism. So metalism consists of the view that for something to be money, or for something to work as money, or for you to be able to trust it, it has to either consist of or be tied to some good with independent market value. And of course, traditionally, precious metals, gold, silver, etc., has been the main form of this market value. That's why we call it metalism. And the high point of this view of money was the gold standard between 1871 to roughly 1914 or 1930, depending on how you sort of view it. Some say it goes all the way up to 1971 and the end of the Bretton Woods era. The second view is chartalism. Charter comes from the Latin word meaning legal document, etc. That says that the crucial issue here is that money, for it to be money, must be a legal creation issued by a state. So the state decides, using its power to legislate, that this is money and that's not money, etc. And upholding this also, saying that if you have this, you have money, etc., you can pay for it, etc. The state is very important here. The third one I call functionalism, which is that for money to be money, it must fulfill these basic requirements, and this is well known to most economists. I think this is in mostly of the A-level textbooks, textbook Economics 101. It must act as means of payment, unit of account, store of value, etc. This was originally proposed by the economist Stanley Jevons in 1875 in his book about money and exchange. So the thing here is that this becomes quite attractive to central bankers, right? Because then you can say, well, a central bank can make sure to handle money, issue money in a way that it fulfills these three aspects, right? So established forms of currency today are mostly a sort of combination between chartalism, because it's issued by central banks, right? Central banks are state authorities, and functionalism. It is issued by a state authority and is being managed in a way that sort of makes sure that these three functions are being fulfilled. So why do we trust these? So let's take a look about what is it that people trust when they use money, etc. So let's go back to metalism, etc., and the gold standard, which was sort of the high point of metalism. So the notion here is that the value of money ultimately rests on the value of gold. Why can you trust the value of gold? And then the notion is that, well, gold has to be mined, right? So you can't conjure up gold from thin air. So this introduces a sort of a natural scarcity, because it's costly to mine and it takes time and effort, etc. Secondly, there was theoretical mechanism attached to the gold standard, which ultimately rests with economic thinkers such as David Hume and David Ricardo. And they envisioned, and this was a key part of upholding the gold standard, the belief that the gold standard worked like a machine, basically. And you could leave it to free markets, etc., to trade with each other, and ultimately, if you had fluctuations in gold, etc., this will balance each other off. So if you have an outflow of gold somewhere, price of gold would increase and gold would return to the country, etc. So if you read sort of statements from this time, you can see, for instance, central bankers in the end of the 19th century saying that this is like a machine, we run this machine, etc. So you can leave us be. Politicians need not apply because this is a machine and we are caretakers of the machine. So you see here, there is trust here in this system. In reality, when we study the gold standard, it turns out that it doesn't really work like this. We can have, for instance, new mining methods, new discovery of new mining deposits, etc., around the world, which can create an influx of gold, which actually reduces the market price. And one of the most prominent examples of this is, of course, the discovery of the New World, which led to a huge influx of precious metals into Europe, which fed into inflation, etc. So potentially there are ways of making gold less valuable than it is. It also turns out that this notion of the gold standard as being automatic seems to be not valid. Because when we look at the gold standard sort of historically, go through the source material, etc., it turned out that it actually rested on a large degree of decisions by central banks and a large degree of cooperation between central banks. So central bank cooperation goes back a long time in history and continues to do so. I mean, this is an example of central bank cooperation that I'm here today at this wonderful building. So it continues to do so. So in our system then, if we call established currencies as a sort of chartalist, functionalist system, what is it that we trust? And most of you perhaps have heard of Max Weber, the famous German sociologist who coined the phrase rationalization and bureaucracy of society, bureaucratization of society. So according to Max Weber, and he wrote this in the late 19th century, early 20th century, he saw a tendency within society at the time towards increasing movement towards rationalization and an increasing part of society being bureaucratized. So the Weberian bureaucracy that started emerging in the 19th century and then spread on was important to maintain trust in society. And I think this is one of the things that we trust. I mean, I am a Weberian bureaucrat in this sense. I'm a central banker, and most of you are as well, or at least some of you are. I think this was an open seminar, right? So perhaps not all of you are central bankers, but you might become in the future. So they trust us, we trust ourselves to be able to take bureaucratic decisions based on our rational understanding of the world and our principles of economics, etc. We can take good decisions. This is clearly something that we trust when it comes to using national currencies. The second one is that we still rely in most systems that a lot of money is actually created by banks. When they issue loans, they also create money. This might actually be an interesting thing, that Sweden and Ukraine, in the sort of amount of percentage of money, that might differ. We might return to that later during the discussion. But the market clearly creates money. So there is some trust also that the market works here, right? Because the market creates money through issuing of bank loans. It's a form of private deposit money. So there's still some sort of trust here in the market. At the same time, we bureaucrats try to regulate the banking sector, right? So we put some degree of rationalization and bureaucratization of the banking sector, hence money creation. So we sort of want to regulate the market, and we want to instill through, for instance, deposit insurance, but also other restrictions on banks, such as capital regulations, etc., to give sort of more belief that this system works, right? So the principle here is, what do we trust when we trust a national established currency, like kronor or dollar, etc.? Well, we believe that the state, equipped with Weberian bureaucrats, and in connection to the banking sector, if it's properly regulated, can maintain functionality of money. So then this sort of give us thinking about what are cryptocurrencies. So my quick and simple definition of cryptocurrencies, or again, call them crypto assets if you prefer, or something else. If I say cryptocurrencies, most people know roughly what I'm speaking about. So I prefer to define them as digital units that are created and transferred between users using cryptography. And if you can find someone who can take a cryptocurrency unit in exchange for something, then you can use it to make payments. And Bitcoin first, of course, is the first and still largest and most well-known of the cryptocurrencies. and was created in 2009 by the anonymous Satoshi Nakamoto. After that, there has been a rapid increase in the number of cryptocurrencies. And it says more than 1,500 present. I made this in sometime 3 months ago. The last time I checked, it was over 1,600. So I need to update my presentation. There you see also how quick this is going. So you do something, and then a couple of months later, you need to update it. And even when I was writing my paper on it, I needed to update sort of the numbers as I went along. So that's how quick things are going. Bitcoin, as I said, is no longer the only cryptocurrency. You can see here, this is market cap, and again, this is February. So you need to update this to get a more accurate picture. But it's still, probably Bitcoin and Ethereum are still the biggest. But it's clear that Bitcoin is still the largest, but it's clearly not the only one. This is an overview of Bitcoin's structure. I don't know how familiar you are with Bitcoin, but the main thing here is that it is a decentralized system. So it creates new Bitcoins, not through issuance of a third party such as a central bank, but through the interactions of the nodes themselves. So if I am the payer A and I want to send a couple of Bitcoins to a recipient B, perhaps the man sitting next to me, what I do is that I post this more or less to the network, and then there is a special form of users called miners. Again, note the use of the word miner, right? It goes back to the gold standard, doesn't it? Because you mine gold, etc. You don't mine digital things. But this is the sort of the terminology that is often being used, and we'll return to that later because that means something in this regard. So the miner can earn money more or less through verifying these payments. And what they get is two things as reward. They get, first of all, a specified amount of new Bitcoins as a reward. That amount is being halved at various intervals to ensure that, so that reward sort of gradually goes towards zero. The second reward they get is that I, as a payer, can add a certain number of extra reward to make it more valuable for the miner to make sure that my payment is verified. So gradually what you get here is a form of a market, right? A market in which if I am willing to pay more money, I can get my payment verified more quickly. And the way to do this is, of course, that and this is the blockchain, of course. Every block contains a number of verified transactions. And the miner can choose which transactions to go for first. And they choose, of course, to go for the one that has the highest fee attached to it. That is why you can speak about a market for block space, or a market for getting your transactions done quickly. So afterwards, when my transaction has been verified by the miner through solving a certain set of mathematical problems using computed power, my transaction is added to the blockchain, and the miner gets new Bitcoins, and he gets my transaction fee. So what do you trust in this principle, in this cryptocurrency? First of all, what don't you trust? I'm going to remove my jacket because it's getting quite warm here. So what don't you trust? Well, clearly there's a lack of trust in governments, right? Clearly there's a lack of trust in the barbarian bureaucrats, right? So you don't believe, and clearly you don't believe in the banking system and its regulations, right? So there's some degree of lack of trust here in cryptocurrencies that are quite fundamental for its appearance. And true enough, if you read the published comments by Satoshi Nakamoto when he created cryptocurrencies, what he says is basically that after the financial crisis of 2007, 2008, he doesn't trust the system anymore. He wants something new that is unrelated to both government and banks, etc. So what do you trust in instead? Well, you do trust in a way, trust computers, right? And you believe in non-human interference because there's a set of protocols and humans do sort of interact with the network, but only in order to make money, right? The sort of the miners, etc., who verifies these transactions. So this sort of reminds us about the belief in an automatic system that they had during the gold standard, or believed they had during the gold standard. Certain other monetary rules that could be followed sort of automatically also relate to this sort of belief in non-human interaction with monetary, with the creation of money. The other thing is that you trust in artificial scarcity. There is no real natural scarcity here. It's all about numbers, etc. But through this mining process, you can actually introduce a sort of artificial scarcity, because it's about the complexity and the difficulty of solving the mathematical problems to verify the payment transactions, right? So if you have a very high difficulty, that is going to require a lot of computer power to solve the problem, which relate to energy cost, of course. So you sort of get a sort of, as you have rigged the system, it's going to cost, and you get a sort of artificial scarcity. And you can basically get an artificial scarcity that you can trust. And that's sort of one of the underlying assumptions here. But it's also about trusting a market-like system, right? You still trust the profit incentives of miners to actually do this, to carry on verifying the transactions. So these sort of things, a lot of these things are reminding us about the gold standard. And true enough, a lot of the people who are sort of enthusiastic about Bitcoin and things like that are also believers in the gold standard. Ideally, they would want gold standard. They don't have gold standard, so they try this instead. And it's also fed into older forms of libertarianism, etc., which have never sort of accepted the fact that central banks, who are seen as a state bank, etc., have control of the money issuance. Please remember, for instance, that Friedrich Hayek wrote in 1976 a book called Denationalization of Money, in which he argues that the only way to make sure that money works well is to make sure that the market creates money and not the central bank, which is the state. So get rid of central banks, get rid of the Weberian bureaucrats, and the market, of course, in Hayek's view, is better than any human judgment. This is quite an important point when it comes to Hayek and people who adore Hayek, etc., and libertarianism, that the market can do everything better. It can do things better than central banks also. So maybe we should call this crypto-metalism in some way, because it sort of still is inspired by the gold standard. They want to do this in a sort of digital era. Of course, there are some drawbacks here, at least still, when it comes to cryptocurrencies. What do you get when you what kind of problems do you get if you have a system that is not managed by these bureaucrats, which we are afraid of if we trust this? So one other thing is, of course, that there are few possibilities to actually buy things with cryptocurrencies. I don't know, in the Ukraine, in Sweden at least, I think I found around 40 companies who actually accept Bitcoins as a form of payment. And often they do that more as a form of commercial activities, sort of PR-related activities, sort of saying that we are a fun shop, come here and you can use your Bitcoins, but they're not very serious about it. And I think it's around 3 among the biggest online vendors which you can actually use Bitcoin to buy things. Sorry? And another thing is that most people actually buy cryptocurrency not to use as payment, but for speculative purposes, right? And this has to do also with its fluctuations in terms of value, right? Because if we look at, during 2017, in less than a year, the value of Bitcoin increased more than 1,000%. And it's virtually impossible to find any form of investment that will give you so much. So Bitcoin was a tremendously good form of investment in 2017. So the question is, do you want to pay for your cup of coffee with something that will be worth 1,000% of what you have in a year. So if you own that, you will probably not think about it as money. You will think about it as something you invest in and then expect it to rise. So, and what do central banks call money that is increasing in value? Well, they call it deflation, right? So Bitcoin and other cryptocurrencies during 2017 experienced a tremendous amount of deflation. And deflation means that no one wants to use it as money. So it's very dangerous for an economy to be reliant on something when you have deflation. So, and because of Bitcoin's decentralized structure, it is also difficult to guarantee to sort of change things to fix this. I mean, there have been plans to change aspects of Bitcoin, but it's run into trouble because you need a majority among miners, etc., to do this, and that is why you've seen it sort of fragment into new forms of Bitcoins, alternative Bitcoins, like that's Bitcoin Cash, etc. There's another thing, which is the average transaction fee. If you remember that I spoke about block space and transactions as a form of a market, well, markets fluctuate in value, right? So this is the average transaction fee for payments with Bitcoin during 2017. And you see it fluctuates. And towards the end of the year of 2017, it was up to $60. So would you pay your cup of coffee with $60 worth of transaction fee? Probably not, right? And yet this is an aspect of how Bitcoin has been constructed. These are sort of, this follows out of its protocol. And again, the value of it, etc. You see 2017, it sort of increased, and then it falls down, almost loses half of its value. And this has something fundamental to do with what's the value of money, etc. Bitcoin more or less relies on the idea, and many others, that the ultimate source of something value is that you have a fixed supply, or a supply that is very inflexible. But you forget that the value of something is about supply and demand, right? So if demand increases, you can have fluctuations in value because demand fluctuates, right? So this is what you see. You could say that the problem here is that Bitcoin didn't create enough Bitcoins. It was too inflexible to ensure that you didn't have deflation. And when you have deflation, people stop thinking about it as money, and it becomes something instead that you buy and then hold on to. So if we return to these three classical ways of looking at what's money, etc., we can say that established currencies, or at least can be classified as money, at least in terms of chartalism and functionalism, whereas cryptocurrencies can't be seen as money in any of them, because it's not based on any commodity in itself, such as gold. It's not issued by a state, and it's not it cannot, at this time at least, it cannot offer these three functions of money. When it comes to risks, and I include this just simply because I'm a central banker and we think about risks, etc. So it's still quite a small phenomenon. It's in 2017, it was only 275,000 transactions globally per day, which can be compared with 9 million cards transactions per day only in small Sweden. So still small ownership compared to the total economy. So I think the main issue here is, the main takeaway here is that it's actually quite a low risk for financial stability in its entirety. But for individuals, of course, the risk might be quite large if you own these and operate these, because if you own them, you might lose a lot of money if they fall further in value. So this sort of brings us into the question, central bank issued digital currencies. Now, what would this be? What would it be, for instance? Because we have now, we have discussed cryptocurrencies. They're a digital form of currency. So, and this is a special thing for Sweden. This is declining use of cash in society, because you could say that we're all gradually moving towards digital. And this is part of the reason why I'm here to discuss in the financial inclusion, etc. So this is uses of cash, and you see Sweden, SE, we are quickly losing cash in our society, etc. And you could say that this is good from a term of financial inclusion. People are becoming more financially included, etc., etc. But let's recall again what's the typical modern modern system of money? Well, this is a quote I have from the Bank for International Settlements. So contemporary monetary systems are based on the mutually reinforcing roles of central bank money and commercial bank monies. So commercial bank monies, of course, are mainly deposit money. If I sort of insert my money on a bank account, I have commercial bank money, sort of. So central bank money are available in mainly two forms. If I am a financial institute, like a bank, I have access to central bank money in form of central bank reserves. And these are digital. The public, on the other hand, only have access to one form of central bank money, which is cash. So if we then say that if we look at a sort of cashless society, such as Sweden sort of could be rapidly emerging to be. So what will happen when the public does not have access to central bank money? And all the money that you can access is virtually not central bank money, but private bank money. So what do you lose out if you don't have central bank money? And this is basically what the Swedish central bank is sort of faced with, sort of thinking about what would it mean, etc. And we don't have any sort of firm conclusion here yet. We are looking into it. So one way is, of course, to say that if you have central bank money, that's zero risk money. Because a private bank might always go bankrupt. You can reduce that risk through deposit insurance or through regulations, but you can never be zero. It's also about ensuring resilience and safety in the payment system, making you as a citizen safer. So there are everyday malfunctions, maybe the card terminal is down, etc. This might more be a nuisance than a big problem, but still it's a nuisance. There are also more serious things such as cyber attacks, war, natural disasters, things that might disrupt digital and electronic payments. What if you then don't have anything to fall back on, a safety net, so to speak? It is also the question of financial inclusion. I mean, some people in Sweden are now finding it very difficult to live their lives because they're cash, and they rely on cash, people such as the elderly, but also some people with various forms of disabilities who find themselves in a much more difficult state of life because they can't use cash. It's also about efficiency. How can a central bank make sure that there is no future concentration on the payments markets in the future, which might mean that the companies who are in charge of payments, etc., might take out higher fees, etc. So the conclusion is that no matter how we think about this, for a central bank, there are too many factors to ignore. At least a central bank that is in a society that is rapidly sort of becoming cashless needs to think about this. And this is why the Swedish Central Bank has a project looking into, first of all, the situation of emerging in Sweden as a potentially cashless society in 5 to 10 years. And one possible way of moving forward in such a society would be to issue a central bank digital currency. So that would simply be digital central bank money available to the public. And I want to emphasize that no decision has been taken yet on this, and this relies on an analysis, etc. And I hear also now, I've learned today about the e-hryvnia. There is a project here in the Ukraine, and I'm very excited to hear about that. And I forced some people here to keep me updated on it as it progresses. I'm very fascinated to hear more about that. So let's just give you a brief glimpse here. So the two main options we are thinking about is either what we call a register-based e-krona. That would be sort of the possibility of citizens actually having an account at the central bank, and a more limited one, which we call the value-based version. This would mean that you have a card or an app which you can fill with a certain amount of prepaid e-kronas. When it comes to technology, we leave that question open. Should we decide to do something like this, we will still need to think what do we want this e-krona to look like? And then when we know that, we can say, okay, which technology is the best for us given what we want to do? And there will be a decision taken by the executive board of the Swedish Central Bank in late 2018, either to terminate the project or continue analysis, or actually going forward and actually trying to do something like this. And there's no way of telling what they will, which decision they will reach. But whatever it will be, given the principles we have already discussed, I think it's fair to say that it would not be a cryptocurrency as we have discussed earlier. It will rely on different types of principles of trust and functionality. So it would be issued by the Swedish Central Bank, and the Swedish Central Bank is a state authority, so it would be a claim on the Swedish state. It would be expressed in Swedish kronor. It wouldn't be a separate currency, and hence it would be covered by the central bank's inflation target and its general sort of mandate in order to, and obligations to uphold this system. And since it would have a responsibility for the infrastructure in the final version, transactions fees, etc., could not be allowed to fluctuate. So, in conclusion, the e-krona would be issued by the state and managed by the Riksbank under these principles of the Weberian tradition that we've already discussed, under chartalist and functionalist principles. So in many ways it would be a continuation of what we're already seeing now, but in the digital era. I think I'll end there. Yes.
Any questions, Paul? Yeah, please.
My question is, we're all familiar with competitive banking system in Britain, and what is your view, if not central bank issuing, but like in Britain we know that commercial banks have that function to issue money, and how do you see, you know, a solution for these cryptocurrencies with the competitive banking system, where, you know, in Britain they have competitive banking system and it's private banking issuer, and we still have a safe system. So what is your view on that? And also another side, a lot of illegal operations financed through the cryptocurrency. How do you see regulation of shadow economy through all of that, especially if we allow, you know, commercial banks issue those currencies?
So can you repeat what you said about the competitive banking in London?
Well, you mentioned that one of the problems is that private banks not issuing money, the central bank does the function and so on, but competitive banking system is well known when, you know, in United Kingdom, like Bank of Scotland issue their money.
Yes, but they're backed one-to-one with central bank money in the Bank of Scotland.
Not absolutely.
Okay.
They have their own monetary sort of decisions.
Okay.
And, you know, with cryptocurrency, they probably will have their own decisions as well within the country. And using that competitive model, how do you see that development? If, for example, in Ukraine, we allow commercial banks to issue those currencies.
Issue cryptocurrencies.
Yeah, and then, you know, right now we have a lot of problems that corruption, pretty much,
yes,
illegal money laundering, everything going through that channel, and how we potentially what the central bank should do. We don't have the legal, you know, regulation inside the country, and how we can do it today. You know, legislation takes time to get it in work, but you know, right now, like tomorrow, how we can actually act to prevent those, you know, development.
Yes, now I understand. So when it comes to, we do see that some, because origin of cryptocurrencies relies on decentralization, etc., which is that you shouldn't have someone issuing it, sort of a central authority. And in these terms of, if I understand you correctly, you're asking about a bank being sort of the central issuer, etc., etc. And we are seeing something similar with some, like Ripple, for instance, in which they pre-mine all the crypto units, and then they sort of manage that in a way that isn't possible in more decentralized forms of cryptocurrencies. So I would say that in a way you are changing the principles of cryptocurrencies and making it more managed. So if it makes more sense if you can then sort of solve some of the problems of the crypto problems through increasing centralization, well, that's fine in a way then if you can solve those problems, but it's still sort of changes the very principles of trust that you had from the beginning. So it becomes something different in a way, because then you're again trusting the bank, right? So you take away some of the very foundation of why you needed this in the first place. So this would be for the issuer of this then to start thinking about, okay, what do I gain by doing this, etc. And I'm not sure about these specific ones that you mentioned, if they have specific reasons for doing it, if it's a profit thing. But what we also see is that many banks say that they're interested in using blockchain, for instance. But it's more important today for them to say to their customer that we're looking into this, because that's a PR-related matter. So they can say, we're a modern bank because we look into blockchain, but they have no intention, or I suspect that they have no intention of actually doing something with it. But it's more about signaling to their customers that they're a modern bank who are willing to improvise and are willing to be a pioneer. So I think you need to look at case by case, sort of, to look at, okay, what is the rationale for this cryptocurrency, etc. What are the principles under which they are issuing it, and what is gained versus any other cryptocurrency or any other national currency from doing this? And what was your other question? Legal. Yes. Yeah. This is a problem. Yeah. Yeah. This is, of course, very difficult to know. I mean, there is research. There's a research paper from University of Sydney, I think, and they claim that around 50% of all transactions in Bitcoin are illegal. So this is a real problem with it. And how can you do it? Well, I think many of the people, many authorities are now looking into how can we increase regulation here, and that's sort of under discussion now, certainly abroad, etc. But there's no quick fix. There's no quick fix. But I do agree that that's one of the problems. Thank you. Thank you.
Thank you for your presentation. If I may, I would like to ask you two questions as well. First, just for my own ignorance, given what would be the difference between e-krona and the electronic form of krona which is used in Sweden now?
Yes, the main thing would be that the electronic krona is most likely in a form of on a bank account, which is a private bank money. And the thing is, both would be electronic, but one would be central bank money and the other one would be commercial bank money.
So there would be an issue then for commercial banks in that scheme. They would be sort of squeezed out from the business in a way.
Well, that's one possibility, but probably not to any large extent. It depends again on how you define. You're thinking about their deposits, right? So what you're saying...
payments as well.
Sorry?
And payments.
Payments,
so
yes. But on the other hand, now central bank money has been squeezed out by banks. So is it better that banks squeeze out central bank money, or is it... What do you want? Well, I think that the best is to have a combination, right? Competition is always good. But I think this is because what some people are afraid of is that you will have a digital bank run. So if suddenly you can have central bank accounts and people are going to move all their money from banks to the central bank, and fine, that's a very important point. So how do you deal with it? Well, one way is, of course, to say that an e-krona account would probably either zero interest rate or have an interest rate that's considerably lower than bank accounts. And people are should use it sort of for payment transactions mostly. So that sort of would in normal times mean that it's quite a low sort of attractiveness for these accounts. And you can of course have a certain form of quantitative restrictions. If you have this value-based, for instance, that I mentioned, which is a more limited form, then you wouldn't have this sort of accounts that would sort of draw deposits from the financial, from the banks, etc. So, but it is a very valid point, and it's highly being, and we're certainly sort of investigating it. What will be the consequence? And financial stability is, of course, one of the foremost things that we need to think about. So,
yeah. And the second question, if I may. So, probably the cryptocurrencies are not fit as currencies for two more reasons.
Okay.
So, given their number, we see that there is, if there is a trust for in cryptocurrencies as a whole, probably there is a lack of trust in each single of those 1,600 currencies. So, and the second point is that the unit of cryptocurrency is normally not fit to service the exchange of goods and services in the economy. So, given these features, how would you describe, in your own view, the nature, the economic nature of cryptocurrencies? What do you think it is? Is it sort of an asset, a speculative asset, or something else? Thanks.
Yes, I do think it's more like an asset, at least, and that is also how people define it. I mean, that's how they use it. I mean, if we saw people actually using it as money, then I would say, well, maybe then it would have more similarities to money. But most people are actually using it as an asset. I think that's important. How do people actually use it? Well, they don't use it for payments, they use it for speculative purposes. And that's, to me, sort of is the most important part, how people actually use it. More like an asset than a currency, definitely.
Thank you.
Thank you very much for your presentation. As far as I understood, your bank is planning to more concentrate on working with e-krona. What would be the place of coins and paper money in circulation? Will it exist, or you are going to withdraw it in the end?
So what you're asking is, would we get rid of all cash?
Yes.
And first of all, as I said, there's no decision to actually go ahead with this e-krona. This is something we're considering, and we need to sort of analyze it. And ideally, we wouldn't want cash to disappear. We would want to sort of have cash as an alternative. And our hopes is that if we do something like that, it would be a complement to cash and not a substitute for it. So, but as it looks sort of trend-like, cash is going to disappear anyway. So that's why we need to look at this. But we're really sort of trying to save cash also, although that's not going so well, sort of. So we want sort of cash to exist. It is in some form. That's sort of the easy way.
Very interesting discussion. I want to ask more complex question, point of view about the monetary regime, inflation targeting, and the cryptocurrency. First, because always these links, first, in case now the expectation of increasing prices of cryptocurrency every time, no, it's dynamic, it's adaptive. And this use as assets, not as the cash. But in case if the situation is changes, maybe this will be used as also as for transaction, as store of value. Not only as store of value, as also for transaction. And this is crowding out effect, and this is maybe share of the cryptocurrency will be push krona in transaction, and money increase sharply. Main idea to enter in expectation in the inflation targeting. This means this first will be undermine this position, inflationary expectation for low revenue, because cryptocurrency will be used for transaction additionally. Second, in case if the also use as assets, what do you think? Is it possible the liquidity, permanent liquidity trap for the central bank because price of the part of the assets increase, this is prices will be near the zero, maybe deflation, for permanent or no? What do you think?
These are very fascinating questions. So if I understand you correctly, we're discussing a scenario here in which cryptocurrencies would become more virtually accepted, if I understand it correctly. Yeah,
first in case if not increase as now Bitcoin, but sharply started to use for in big value, in big volume as transaction, for transaction.
No, it's and and I think that would probably have huge implications, and I think some of the things that probably mean that we won't see this at least in many years is, of course, the problems that we've been discussing. So that sort of undermines people actually using it in a more extensive manner. But if we were to hypothetically say that this would happen, we would sort of solve this problem technologically, or the crypto community would sort of find ways around these problems and sort of make it more. And then the question is, would that sort of crowd out the national currency and make central banks powerless, basically? Because that's what I... And if that were to happen, and I think what we need to understand is that central banking has never been entirely static. So if we go back 150 years, central banks, or I mean, Swedish central bank is 350 years old. We just celebrate 350 years old. When we started our operations, we were mostly acting like any other bank for profit, etc. The Bank of England was virtually a commercial bank itself. So central banking always changing itself, and it changes also with circumstances. So before the crisis 2007, 2008, who would have thought that central banks would be doing quantitative easing, for instance? So I think that if this were to happen, the central banks would probably try to adapt to the situation that we're seeing in ways that's very difficult to sort of foretell, etc. So I do think these are extremely fascinating questions that you raise, and I think I will keep pondering them. Maybe actually before I sleep at night, I will sort of return to that question, because I think it's truly fascinating question. These are really the big questions. Yeah. But these are very fascinating questions. I mean, this is also why it's sort of evolving system. I mean, technologically, economically, everything is an evolving system. It sort of challenges us constantly to reinvent ourselves. It's truly fascinating.
Maybe some questions. Oh, okay. Yeah, please.
Thank you for your presentation, and I have a couple of questions. And first of all, first one is we've been talking about the coffee, and what about $60 for transferring, let's say, $2,000 from Ukraine to USA in 20 minutes in the consequences of currency restrictions? What about this price?
That's better. That's a better deal.
And another question, it's about the motives for people to use cryptocurrencies. It's always, people are always talking about the speculative motive, the main one, and also today we heard about it. We also talk about these gray motives to avoid some laws. And what about the, let's say, crypto-anarchistical motives?
Ideological motives, yes.
Yeah. Should we avoid this motive, or should we account for it? So I think a lot of people think about this motive when using cryptocurrencies instead of fiat currencies. So, okay.
No, I think these are valid points. I mean, the first one being that one way in which a lot of sort of innovations are trying now to sort of make sense of is cross-border payments, etc. And you can certainly try to do it with bitcoins, but the question is, are there other things that are better, for instance, for it? I mean, this is, for instance, what Ripple is trying to do, sort of through, but connecting towards the bank sector, etc. So we have to see it as sort of an evolving ecosystem of new financial technology, and Bitcoin, etc., is just another one of these. And perhaps there already are better ways to actually do it without many of the pitfalls of cryptocurrencies. So that's the first one. The second has to do with motives for using it, ideological. And I think, I mean, those are, as any ideological concern, I mean, they are probably valid for them, etc. If they don't trust the banks, if they don't trust the government, etc., it is up to them if they want to use this. But again, I've talked with some of these people, and again, it turns out that they actually use them. I mean, I watched one presentation from a libertarian at the von Mises Institute, and he was telling his fellow libertarians to hold on to their bitcoins. Even though he's a libertarian, don't trust government money because it's going to fall in value, it's going to be inflated away, etc. Hold on to your bitcoin instead. And then he sort of brings out the point again, they're not looking at it as money, they're not using it for payment, etc. So if you have an ideological commitment to Bitcoin, and I've met a fair deal of such people, and some of them I can relate to that. Some of I would also say there's another form. I would say that there are four main users. One is, of course, people who want criminals, etc. I'm not counting them. Then there are ideological motives. People are libertarian, etc. And then there are technological ones. People are enthusiastic about technology. And those are the ones I relate to the most, when I find a common ground there, because I love technology and they love technology. We find lots of things to talk about. And then there are the speculators. I think the speculators are the bulk of them. But I do think that if you have an ideological commitment to Bitcoin or something else, please do use it as payments then. And take this sort of loss that you know that you are making when you buy a cup of coffee, even though use it for that kind of transactions. And if you're willing to take that loss, then I have no objections to that, personally.
I also have a question. It regards the connection between market for cryptocurrencies and other markets for investors like bonds, equities, and so on. Do you see that these markets are connected? Because I see that cryptocurrencies grew up rapidly after financial crisis in the environment of low interest rates, and this bubble has burst after in the period of normalization. And is there an opposite effect? And does your Financial Stability Department take into consideration this market? Is it sufficient now, or is it not very high taken into consideration?
I think it is an important thing here that if you have low interest rates, if it's difficult to find investments that are profitable, people will look into alternative forms of investments. And I mean, at the Bitcoin, I mean, 1,000% during 2017, of course, is huge. Probably I've seen numbers of it, and it's probably higher profit from that than any other asset in history that I can see. The only thing that comes close to is the tulip mania from in Holland, the 17th century. This is, of course, before the crash in the beginning of 2018. So I do think that is connected to it. People looking for alternative ways of investments. Again, when it comes to financial stability, it's still sort of. It's mostly, I think, a concern for individual investors still, sort of. It's still sort of a limited phenomenon that even if we would have a complete collapse in cryptocurrency, etc., it would have, I think, very small effect on the overall economy, etc. But again, it might have devastating effects on individuals. So in many ways, it's still about consumer protection still. But again, we don't know for sure what will happen in 10 years. I mean, what happens if big banks start to invest in this, for instance? Perhaps things can change. So that is why authorities, central banks, we still need to sort of look into this and keep track of what's happening.
Thank you for very useful information. It's very clearly in line with our understanding, but it's a very simple question. Do you plan any restrictions or limitations in buying electronic krona?
In Sweden? Or
Sweden.
This has, we probably don't have a mandate to do this, because it's sort of, that would be more a financial supervisory authority, which is separate from the central bank. As I said, these are being investigated on an international level in various committees, etc., in which many countries are starting to sort of take initiatives and starting to discuss this very question. And it's still in the early process of discussing this, but it's certainly, I think, we will see. I see two things happening now in the international communities and among national jurisdictions. One is a question of how to define cryptocurrencies. We see sort of discussion, is a cryptocurrency always a cryptocurrency, or are there different types of cryptocurrencies? That is being increasingly discussed, and we see that. And the other way is, should we regulate it, and if so, how? So it is clearly in Sweden that you must pay taxes. If you trade with cryptocurrencies and you make a profit, you need to tax it as if it was a financial asset. That's very clear. And there are various other forms of... so my guess is that if it continues to grow, it will be regulated. That's my guess. But we'll see. It's sort of a process.
One more question. So the cryptocurrency market is a pretty young market. And now we can see some signs that institutional investors are interested in this market and maybe will enter this market. So do you think will this, in the case if institutional investors will enter the market, will it be less volatile? So maybe it will resolve this problem of volatility and the problem with price of cup of coffee.
Well, you're right that, and I hear this also from some sort of investment banks, etc., that primarily customers of them are interested in making things, and they're a bit reluctant still, perhaps with some exceptions, etc. So we'll see. As I said, if they would start to do this, and I think that might change also this question of regulations, because at the moment perhaps it's not very regulated, but my guess would be that if they would sort of enter, then they will sort of, the regulators would quickly sort of start to because then it would become a question of financial stability. And as for the question of whether this would sort of increase stability, well, I don't know. I don't see the principles that would lead to that. I don't see the principles of it.
They will compete with each other, so like bulls.
Compete with each other? What do you mean as each bank?
As traders. So
as traders,
yes,
okay.
And the volumes will increase, and now...
But you would have bigger concentration of, is that what you're saying, sort of a bigger concentration of...
Now you should have not much money to make 10% rise in the price of Bitcoin. And when institutional investors will come, the capitalization of market will rise, and it will be harder to make this fluctuation.
Ah, okay. But that also, I see. So what you're saying is that if we have a deepened market, so to speak, okay. But I see another problem that could be the opposite of that, which is if you have a few big investments that come in, you sort of further increase concentration, which again means, because a deepened market offers mean that it's so dispersed that even if one would sell off, etc., you won't sort of touch the price, etc. So it again also comes into how big is the market in terms of how many, and then you come up to, of course, when it comes to Bitcoin, this cap of the number of Bitcoins that you can create, etc. And is that number big enough to sort of allow this sort of? But I do see what you're saying, and it's very difficult to know. It's very difficult to know.
More comment, as I understood, institutional investors are waiting for your regulations, and you are waiting when they come, then we will come.
Yeah, that's an interesting situation. Such is life.
Thank you, Dr. Soderberg, for your interesting presentation. I agree with you about your approach of cryptocurrency is not currency, it's digital financial assets. In Ukraine, we have three conceptions about development of this cryptocurrency area. National Bank of Ukraine as a regulator is wait and see. In our parliament, Верховна Рада of Ukraine, there are two draft law about legalization of cryptocurrency. One approach is financial assets, and the second draft law is goods, VAT and other problems. And what about regulation from Security Exchange Commission, is your opinion? Maybe it's security, digital security, or no? And the second question about issue of Bitcoin as a part of global
sterilization of fiat money. Is it true perspective?
What did you say? The standard of?
After crisis of,
yeah.
We have a lot rise of money in the balance sheet of central banks.
Yes.
And other. And about inflation targeting as a monetary regime practically in all country of Europe. Maybe new assets, new financial assets, Bitcoin and other Litecoin and altcoins is a new assets for growth money from stock market, from bond market to new market, and no push on the prices. Sterilization for monetary base.
Yeah, well, it goes back to one of the questions here about if it's difficult to find good revenues from investing, and you find alternative investments. I think that's probably accurate, and people looking for some way to store money, and we've had a lot of money sort of looking for investment opportunities, etc. I mean, if you can't buy, if you can't invest in American CDOs, for instance, and that's sort of taken away, you look for something else, etc. And I do think there's also some of this sort of reduction in trust in the banking system, and the state has to do with quantitative easing, etc., etc. But I think the most important driver, I think these are some of it, is still speculation, I think, when it comes to the bulk of the people who use it, sort of who owns it. And then concerning securities, yes, I do think that if it continues to exist, it will likely be regulated sooner or later as more like a security or something like that. And that also has, if you regulate something, that is of course also one way of bringing it into sort of also bringing it respectability, etc. So paradoxically, as you said, perhaps if you regulate it, that's the only way to sort of get it. That would sort of make it legitimate in a way, because if you sort of you take it on board into the sort of the formalized financial sector. So, I mean, this is something that the regulators have to take into account, sort of weighing, regulating it, and therefore also recognizing it instead of sort of leaving it out. These are complicated questions, all of it.
Thank you. And one remark. What is your opinion about initial coin offers, ICO process?
Yes.
It's like IPO, not regulated, very speculated.
Yeah.
Or what is your?
Well, again, this has to do with consumer protection, so it's not really not really my strong side, and I don't have my central bank doesn't have anything to do with this. So. What I find is that supervisory authorities have spoken out and been sort of warning about this, that it is quite difficult to know what you are getting, etc., etc. So I certainly wouldn't invest in it. That's although again it's an early phenomenon. We'll see sort of what happens with it. But I have met people who are very enthusiastic about it, who say that it's an important part of future. I mean, crowdfunding, etc. This is a form of crowdfunding. Potentially for some, it's a way to raise money, etc. But again, it has to be regulated in a way that makes it sustainable if it's to be something to be of use.
Thank you, Doctor.
Thank you, thank you.
My question arises from the previous comments and questions.
Yes.
Do you see anywhere over the foreseeable horizon the regulators and central banks accepting cryptocurrencies as eligible assets or highly liquid assets for prudential reasons and open market operations probably?
I think that's, if it would happen, it's quite far in the future. It would have to, I think it would have to be much more. I think it would be, first of all, I think it would be difficult for central banks to stomach such an acceptance. But I also think it has to do with cryptocurrency. At the moment, at least, we'll wait until the future to solve this problem that I mentioned. If they can do that, then we don't know what happened. But we're sort of speaking very hypothetically here. So so many things would need to change for that to happen. So not in the near future, at least. I cannot rule it out, no. So it is certainly an exciting idea.
So, okay. I think that we have to thank our speaker. You, as I see, you got even unexpected questions, comments, and remarks, and I hope it helps you
Of course.
for your future.
It's very delightful.
Work. Yeah.
It's very delightful.
Yes. Your work got us a lot of insights also, and it made us clear how the cryptocurrency market works, and thank you for this, and we hope to see you here again.
Thank you. I hope to be here again soon.
New work.
Thank you.
I also thank all participants for fruitful discussion, and next time we will have our open research seminar in 2 weeks. So please, you are welcome, and good luck. So.
Thank you, thank you.